Welcome back to the Eric Krown Crypto channel. Wishing you a happy nice Tuesday. It's a big Tuesday. We got CPI prints coming out a little bit later today. All kinds of events this week. And what do you know? The global market cap is being shown at $0 billion. That's a problem. What the hell is going on over here? Mournfall, get on it. What the fuck, man? Anyways, I do want to let you know that before we get into the actual content of the day, that you can set alerts for yourself on the Krown Chain application for events that are upcoming. You can bring it up in this list over here. By the way, it's all free. And yeah, CPI coming up later today. And by the way, PPI tomorrow, alongside many other events. So do keep your eyes on that, because that is likely going to produce some very nasty volatility around those time frames, you know, leading up to it and then a little bit after as well. Anyways, now that we've gone through that, I should also let you know that we do have our 5-year anniversary sale going on right now, which is actually insane that it's been 5 years. I've been making these videos every day for 5 years, haven't missed a day. It's been amazing, honestly. It's been like the highlight of my life. But I should also let you know that yes, all of the programs and products are on sale for the next 7 days or 6.5 days or so. Please, I would humbly request that you do watch the promotional videos that accompany any one of these programs or products, so you understand what you're getting into and, you know, if it's for you or not for you, because it very well might not be for you, and then you won't bother our lovely sport girls. Anyways, now that we've gone through that, let me close this. Let me get into, oh no, we're already there. All right, nice one. And let's follow up on yesterday's short-term time frame analysis. So yesterday's short-term time frame analysis, we were looking at a short-term pullback based off the hourly HPDR indicator setup, somewhere around about 21,850 to 21,900. Which happened right here, actually. Then continuation was likely based off the higher term time frame setups that we're looking at from the daily Joule and the daily stochastic. So in this case, I'm actually going to be following up on, it's fucking some in my again. I'm going to be following up on the daily Joule setup and focusing on that one, because I think it's the more interesting of the two right now and does have greater implications for the more long term. And we'll kind of thread that into an even more high term time frame idea, and then come at the lower term timeframes if there is something come out a little bit later. Anyways, yes, so we've gone through that. I just want to make sure that everything's working over here. And I just also want to address something. You know, I've been seeing a lot of this on crypto Twitter and even like Instagram as well. Like, people continually remind me it's Krown, don't you know it's a bear market, okay? And bear markets are bad, okay? And banks are going down, okay? And that's bad because it's MK. It's like that guy from fucking South Park. And, you know, look, that very well might be true. I don't think it's a bear market. I don't think it's a bull market either. I think it's a transitionary market. We're going to be going sideways on the higher term time frames for a long time. But you know, this channel is focused on not fucking news, not any of that amazing piece of information. It is focused on statistics of price action analysis. Holy shit, what an idea. So it's great that you let me know these ideas, and hey, you know, that's more power to you. But you know, that's what we're focused on here, just so that you understand what this channel is about. Anyways, yeah, so now let's follow up on the daily Joule setup, because this one is still, well, it's still active, I suppose, or at least seemingly active. And first things first, I should explain it. So what essentially is the setup? Well, anytime that the daily Joule or Joule Light for that matter, has gotten down below the extreme critical zone, which you see right here. Let me just circle it. Where's my damn brush? There we go. Gets down below the extreme critical zone right here, and then turns white on the first tick, that has initiated a higher probability of a pretty decently sized bounce. We've already seen probably a good portion of that. Now, we've seen this happen only, you know, a handful of times in Bitcoin's full history. I mean, if we go all the way back, you know, over a decade now, there's been, I think, 13 times. Let me just double check. 14 times, I apologize. Or sorry, no. 13 times, yes. 13 times, of which 11 of those 13 times have played out with, you know, pretty sizable upside moves. And we can go over these statistics that align with that. So the average return from the actual setup given was about 15.25%. First standard deviation shown right here, giving us a major range going all the way up to even 23.5%, and also forecasting the average amount of days taken as well, which was actually 21 days, so 3 weeks, with a standard deviation of 7 days. So basically giving us a range between the next 2 weeks and next 4 weeks, and we've already eaten up a few days of this. Let's just actually get the exact amount over here, because this one fired off officially 1 day after the stochastic setup fired off. Now, thus far, it's been 2 full days since it fired off, and we've seen, hold on, I'm trying to get this exactly right. Let's see, so from that closure to our current high, we've seen about 13% to the upside. which is pretty good, pretty close to the average there at 15.25%. But when we start to look at this data and we start to, get a little bit deeper into it, when you're considering the average time is about 3 weeks, or even on the lower end, like the most likely time, or 68% of the results should be falling between about 14 days to 28 days, this would be considered quite young, quite immature within its overall trajectory, or at least, based off statistics, it's probabilistically speaking, quite immature, meaning that it probably has more to go over a longer period of time. Again, I'm just reading the stats here. So in this case, would it be reasonable to say that, hey, we might see this one? This would be the type of setup that you'd probably see go maybe closer to the top side of the first standard deviation, maybe even be a bit of an outlier. I mean, we have seen this setup go for, we've seen this setup go for like significant ones as well, like 38% over here. And while a lot of these are kind of within the deeper teens, I should also let you know that this was just measured for the next major high. And of course, many of these setups, after that first major high, reaccumulated, reconsolidated, and led towards more continuation, actually. So it's not necessarily saying that things like exactly have to go there and then back down, blah, 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 blah. That's a topic for another time. I'm making no comment on that. But 23.5% would be the top side of the first standard deviation here, which would put things where? Well, that would put things on new highs. Which is actually very important because that's going to play into the greater analysis. 23%, puts you where? Actually, at around mid $27,000 to deep $27,000. Seems like kind of a far cry from where we're at right now. Obviously, that's probably going to, if that is going to be happening, that would likely come off of like very good news, if you will, of CPI prints and CPI and PPI prints coming out tomorrow, and then that would probably lead to the Fed maybe not having any interest rate hikes to go. That would probably be like the likely scenario. But you can kind of see that that would be the general trajectory, if you will. And I also forgot to go over like the most important part. Out of the 13 prior setups, 11 played out with major moves to the upside, giving it a pretty high strike rate. Not perfect. Again, there were some failures, some pretty catastrophic failures, I'd say as well, like double-digit percentage failures. But over time, probabilities favor the upside. And obviously this one already played out a pretty damn nice move to the upside, so it's not really going to fail. The question is, how far will it go? So to answer that question, or maybe to bring something else into corroboration of this overall picture here, I want to go and reference the 5-day time frame. So we haven't looked at one of these 5-day or even daily volatility versus stochastic momentum setups in a while. Why is that? Because they just haven't been there. So I also get questions about this. Krown, can you give us an S setup over here? It's like, there's not one that exists, and I can't like make it up. It's like, what do you think this is? Like, I understand that YouTube is for entertainment. I understand that people, go to YouTube to be entertained for the most part. There's obviously other people who feel differently. But like, I'm not going to just make up shit. I think that would like be not wise, maybe. Anyways, the 5-day is starting to set up yet again. So what essentially is the setup? Well, anytime that we've seen the 5-day volatility get down to extreme lows, which is defined as anything below 15 percentile or more on the BBWP indicator, which has only happened, which has actually happened quite a few times in the past. Actually, over the full history of Bitcoin, it's happened 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, enough. Like, it's enough. It's led to an average move of about 42%. Actually, I do have better stats over here where I've done the whole thing. So let me just double check. Yeah, so particularly for long setups, there's been 11 in the past. For short setups, there has been 10 in the past. Now, what makes a long setup and what makes a short setup? Well, that is going to be the direction of the stochastic oscillator upon volatility expansion. So this one is still like, it's very immature. Like the setup has not even happened. We need to see it kind of stay down here for a little bit of time and then expand back above 15 percentile and ideally get back above that moving average with it also having a positive slope. So, this can take a while. But then we can go and reference the direction of the stochastic oscillator over here, and get a highly probable direction for that volatility expansion, which, we're talking about on the short side, an average move of like 35.5%, which is kind of fucking crazy. And on the long side, we're talking about an average move of 43%, which is equally as crazy, maybe even more so. So going back into it here, I just want to say that we'll be keeping an eye on this one. It's not active or anything like that right now, but it can give us, maybe a greater understanding of what's at stake in the long term, both for the upside and the downside. Obviously, however, right now, it's going to be favored in the upside as long as Bitcoin is above the 5-day stochastic oscillator pivot, which is just below $24,000. So what does that mean in the grand scheme of things? It means, over these next few periods, so that'd be 5, 10, 15 days probably, the longer that Bitcoin just doesn't kind of break down below the, maintains above the stochastic momentum pivot and it remains the upside, volatility expansion will likely lead towards, more than likely lead towards a higher probability of an upside move. On the lower end, 33%, on the upper end, something as crazy as 50%, with an average again at about 43. So I'm actually curious what that even look like. Let's just see. What would 33% put? 33% puts you at low $30,000 territory. So that would, I suppose, be relevant if that happens. But again, this is kind of far away. By the same token, if it happens to the downside, we're probably looking at a 30% move to the downside. That would be Bitcoin back down to $17,000. Okay, it's a bear market. Okay, at that point, there's gonna be a lot of people saying that. It's like, I told you so. I knew it. Just like the people right now who are saying I knew it to the upside. Although I think that they're a little bit less so. Equally as insufferable as always. It's like whenever people say, "Hey, I called it," I knew this was going to happen. I told you this was going to happen. It's like, look, there's no way that you can know anything in trading. I've been doing this for like 15 years now. One thing that I'm that I have a strong conviction of. There's literally no way to know with certainty what's going to happen next. There's only statistics and probabilities and what happens in between those. That's it. That's fucking it. In my humble opinion. Anyways, moving on now. Let's get into the last, or actually, that also plays hand in hand with the 5-day Gaussian channel over here. Now, this is a little bit more relevant to the short term, relatively speaking, because the 5-day time frame is going to have a legitimate chance to actually break above the mean band, the same mean band that's been rejecting this bitch all the way since like January of 2022. Which anytime we have seen it reclaim the mean band after being well below it for a while, it's gotten a free ride at least to the top side of the of the Gaussian channel, and in many cases just bust it on through. Just bust it on through for some more busting action to new all busting fucking highs. Don't laugh. Breaking rule number 1. It's not fucking funny. There's people who think this shit's a bear market, sir, and you're laughing at them. Laughing at them. Bitcoin's going to 10,000, and there ain't nothing you can do about it. Because it's a bear market, okay. It's a bear market, okay. Look, it might be a bear market. Again, right now, probabilities don't necessarily favor that. But anyways, in this next, I probably shouldn't set a lot of that because this is like not fucking confirmed right now. Just, okay. But, if Bitcoin does close above the mean band, which is at $23,000 right now, or 23,100, then yeah, this one's also going to suggest likely a move to the top side of the band, which is now in the mid 26s, so 26.5 or so, and then probably pull back from there, and many a times in the past we've seen it just bust on through after that. So fair enough. That's when you start to see maybe the 5 days start to come into fruition. So, one thing before the next, obviously, we're still pretty young in the day here, and I want to reiterate my stance. I'm neither looking at this as a bull market nor a bear market. I'm looking at it as a transitionary market. Look, at the end of the day, like this, you can't call this bullish. You could call this portion certainly bearish, but this over here, I mean, sideways mountain. Anyways, low-term timeframes, maybe let's get over that because there is a potential for a great pullback coming from these regions in the short term, similar to yesterday. But in this case, we're going to be looking at the 4-hour time frame. So it's not active right now, but for the people who have the HPGR indicator, maybe something that you might want to be tracking here because we are witnessing many closures on the 4-hour time frame above the blue 50% of historical returns range highs. Right now, we've seen even the high of this rally go all the way into, let me pull this back, all the way into the deep end of the 95% of historical returns range highs. So it's like very unlikely that things continue from here right now. Is what that is suggesting. And the longer that things go sideways, volatility will naturally cool off. And at that point, we might have a setup as the moving average does come down. Right now, it's actually still expanding because it actually hasn't hit 100 percentile just yet on the moving average. But if it does, then at that point, there's going to be a higher probability of a pullback in the short medium term. You can see over here, we back tested it. Out of 50 iterations, 33 played out with a pretty decent pullback. So that gives it about a 66% strike rate. Again, not 100%, but better than a coin flip is what that would suggest. And we're talking about, like, on average, kind of a bigger move. On the lower end, 2.5%. On the upper end, like 5%. Also on the other, in the other case, as always with these HPDR setups, in the case of failure, it's actually just as useful to know because you're probably going to be looking at about a 4% move to the upside. So what would indicate failure? Well, you need to see a closure above basically the current high, which is basically like $25,000. Just below $25,000. If you see that, then yeah, probably go in for another 4% move to the upside in the short term. But this theoretically would be a really, really good place for a short-term pullback and play out a range, maybe even all the way down to like mid 23s. So again, one thing before the next, despite all the jokes and whatnot, still a lot of things on the higher term timeframes are undecided, but ultimately, you kind of see where those pivots are, and that's what we're going to really be monitoring coming into these next major closures, particularly on Thursday. So with all of that said, I want to be wishing you the best as always. I forgot to show Bybit, or I forgot to even let you know, it's not even a Bybit show at this point. It's a Jewel Light shill because you can actually get the Jewel Light for free. You can get the Jewel Light for free if you sign up to Bybit using the link in the description below. There'll be like instructions basically of what to do. And if you do that, you get the first month free, and you even get 0% on maker fees for derivative contracts, which is pretty fucking good as well. Anyways, other than that, I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.